Good afternoon, everyone. Welcome to this professional lunch here at the Foreign Correspondents Club of Japan in Tokyo. I'm Anthony Rowley, a former president of the club, and I'll be moderating today's event. We're very pleased and genuinely privileged to welcome as our guest speaker today Hiromi Yamaji, here on my right, who of course is Group Chief Executive Officer of the Japan Exchange Group, Inc. This is the second time he's spoken at the club, and we're very happy to have him back again at what I think is a very important time, because obviously stock prices have been in the news tremendously of late because of the surge in values, not least here in Japan, in Tokyo, where the Nikkei has burst through the 50,000 level. But I think, while we hear a lot about stock prices, we don't hear so much about stock markets and stock exchanges, and the enormous effort that goes into running these exchanges, administering them, promoting investment, and of course our guest speaker is going to talk a lot more about this, and I won't attempt to steal his thunder, as it were, but he will also be talking about the way in which the environment corporate reforms have been reflected in improved stock valuations here. Anyway, there's an enormous agenda for him to cover, so I'm going to keep my remarks very short and just say, before I hand over to the speaker, if you have a mobile phone, a Keitai Denwa, please put it on manner mode or switch it off as a courtesy to our speaker. So without further ado, Your Majesty, I'd hand over to you, if I may.
Well, thank you very much, Anthony. Very, very kind introduction. And I am Hiromi Yamaji, Group CEO of Japan Exchange Group. And as he introduced me, I was here last year. This is my second time to be on FCCJ conference. And this year, many of you or everybody has experienced the hottest summer in Tokyo. And more than 10 days of more than 35 degrees Celsius, highest temperature. But now we are getting into the very good season, and you are going to enjoy a very good food and also scenery as well. All the leaves are now turning to a red and yellow. So I hope all of you are going to enjoy this good season in Japan. But last year, when I was here, I talked about the Japanese stock market's strong momentum and resulting from various factors working at the same time. Since then, the market has been up, and we have reached a few milestones on the way. Japanese stock market has been renewing record high stock performance since last year, even last week. There was the new female prime minister that took the office, which I believe the global news wires covered extensively. And the Japanese economy's move out of deflation continues. So the momentum in Japan is continuing and changes are visible. We are hearing good feedback from global investors. Even the heightened global uncertainty had a positive impact because the strength and appeal of the Japanese market is clearer, attracting more investors. Today, I'd like to lay out what is happening in Japan, the role of JPX, Japan Exchange Group, and what is to come next. Before we move into what is happening in Japan, a brief introduction about Japan Exchange Group. JPX is one of the financial infrastructure of Japanese capital market, operating 3 exchanges, a clearinghouse, data-related vendor entity, and a self-regulatory body. Our main business is market operation, namely Tokyo Stock Exchange, which operates the cash equity market, Osaka Exchange, which operates the derivatives market, such as Nikkei 225. Also, OSE, the main market for JGB futures, the benchmark for interest rate market, which just celebrated its 40th anniversary in October this year. We also list gold futures and platinum futures, recently very volatile but active products. Tokyo Commodities Exchange focuses on the energy derivatives market, such as power futures. The cash equity market, TSE, receives much of the attention these days, but derivatives market is also becoming very active. Especially given the changes in the monetary policy in Japan, the interest rate market has the potential for further growth. And the powers futures market is also one of the growing market in Japan. Japan is the world's 5th largest electricity consumer, and the need for risk management is higher. The powers futures market is also ripe for growth. So various types of investors participate in the market, from the long-only hedge funds, high-frequency traders, and the retail investors. And I also talk with various Japanese listed companies. From this viewpoint, I'd like to look at what is happening in Japan. First, it is important to note that it is not a single factor that is driving this momentum. One factor is that Japan is emerging from decades-long deflation. Japan's headline inflation rate is constantly hitting above 2% on average for the past 3.5 years. With inflationary pressure rising, companies are increasing their capital expenditure, especially around the automation and digitalization. And as BOJ Governor Ueda noted in his speech, companies are making labor-saving and efficiency-improving investments to address labor shortages and digital-related investments. Business is strong. Japanese companies have set a record high in net profit for 4 consecutive years. In the past 25 years, after the bubble burst, company profit has increased by 10 times to a record high level. Although the impact of the new US tariffs will be undeniable this year, there are signs of improvements on the balance sheets and economic growth is expected. Another factor is Japan's unique position in the context of geopolitical situation, such as rising tensions between US and China. Especially when the new US tariffs were first announced in April, after the Liberation Day, we saw a shift in the global dynamics. Although the US market and the economy are currently thriving, investors' sentiment has changed. I hear that many US investors have changed their investment allocation because they are fully aware of the risk of the US-centric portfolio. Investors are gradually shifting their investments out from the US and into Asian countries to diversify their portfolio, which is the US plus one strategy. China remains important, but not as much as before. And Japan emerged as one of the alternative investment destinations because under the current situation, the stability and the resilience of the Japanese market and the economy have been highlighted. Also, the size of Japanese economy and the market, its abundant liquidity, and its relative stability and the rule of law make Japan one of the investable markets in Asia. The steady progress of corporate governance reform has also been a major factor in sustaining momentum, as I will explain later. Second is the transformation of the Japanese market. There are still some misconceptions about how active Japanese domestic investors are. Compared to a decade ago, however, Japanese investors have changed. For the institutional investors, their level of engagement and commitment to stewardship has increased with more transparency around their voting policies and practices. Also, the retail investors have a stronger presence in the market. Number of retail investors are steadily growing for the past decade. Especially the NISA, Nippon Individual Tax Savings Account, which was expanded substantially last year, has attracted 31 trillion yen in the investment over the 21 months since the expansion. Approximately 40% of these investments, or more than 10 trillion yen, have been directly invested in the Japanese individual stocks, mainly high dividend yield stocks. Interestingly, NISA itself was introduced in 2014, and in the past 11 years, more than 65 trillion yen has been invested so far. However, as I said, close to 50%, or around 31 trillion yen, was invested in the last 21 months. Since the beginning of last year, notably, 48.8% of the accounts and 44.6% of the investment money are held by people in their 40s and younger, indicating that the younger generation is becoming increasingly familiar with the investment. You can see the speed and strong momentum. Of course, the well-known fact is that the Japanese household still has more than 50% of their financial assets in their bank deposits, which is 1,126 trillion yen. So 31 trillion yen invested through the new NISA means only 2.6% has shifted from savings to investment since last year. The room for growth is huge. Also, the strong interest of foreign investors has pushed for more change. As I said earlier, global uncertainty caused by US tariff policies has convinced many investors that portfolio focused on the US may need to be reconsidered and that diversification is necessary. After Liberation Day, foreign investors were net purchasers of Japanese equity for 17 consecutive weeks, for a total of 6.1 trillion yen, second only historically to the 18-week period of net buying during the early Abenomics era. The recent US +1 investment strategy has brought foreign capital to Japan. Again, recently, after the Prime Minister Takaichi was elected in early October, foreign investors have turned to net buy position, purchasing more than 1.2 trillion yen in just 1 week, a record high in 12 years. For the past 4 weeks, the momentum is continuing for the total of 3.1 trillion yen buy position. Since the beginning of this year already, foreign investors have taken a total of 5.7 trillion yen in the net purchase position. As many foreign investors have noticed, Japanese corporate governance reform is creating sustainable, voluntary changes in the Japanese companies. Japanese corporate governance reform is not just a new initiative that began in the past few years. Its roots go back to more than 2 decades to 1999. The real push came in 2013 when the late Prime Minister Abe made corporate governance reform one of 3 pillars of the growth strategy for Japan. Since then, successors, including the current Prime Minister Takaichi, have recognized that private sector growth is essential to Japanese economic growth, and corporate governance reform has remained an integral part of Japan's growth strategies. Over a decade has passed, and there is clear signs of changes, such as the increase in the number of independent directors. In 2014, only 6.4% of companies in the first section had a board with more than 1/3 independent board members, but now 99% of prime-listed companies have 1/3 or more independent board members. What is quite unique in Japan is that the governance reform has not been mandatory rules, but a principle-based approach using the comply or explain model. Essentially, the reform aims to encourage companies to take bold business risks under the supervision of a strong independent board to achieve higher growth. Forced action invites fierce rejection. Voluntary efforts may take time but result in sustainable progress. Ultimately, the market is the best discipline mechanism, and the investors will evaluate the progress. So the reform has taken a soft law approach where basic principles have been established and each company must decide how to best address certain issues. Year by year, the changes might have been unnoticeable, but after 7 to 8 years, the difference is visible, as seen in the increase in the non-executive board members. However, corporate governance reform is not just about the organizational form of the companies. Rather, it is about the substance, such as meaningful discussions at the board level, constructive dialogue with investors, and changes in the mindset of management toward growth. So TSE launched a series of projects beginning with the introduction of new market segments, Prime, Standard, and Growth in April 2022. Then, at the end of March 2023, TSE made a request for Prime and Standard companies management to be conscious of cost of capital and share price. Managements were requested to analyze the current situation, current capital efficiency at the board level, formulate a plan how to improve it, and update it through constructive engagement with investors. After 2.5 years of encouraging companies to consider the cost of capital and share price, the response has been positive. 92% of Prime-listed companies have responded by disclosing plans to improve capital efficiency and share price. Of those, 72% have updated their plans. 49% of standard companies have disclosed their plans. But again, our aim is not to increase these percentages to 100%. It is to encourage companies to achieve sustainable growth and improve their mid to long-term corporate value. After decades of reform, companies and the management's mindset is gradually changing. Evidence of this change can be seen in an increase in corporate actions, such as mergers and acquisitions, share buybacks, and increased dividends. For example, number of M&As has increased significantly. Last year, a record high 4,700 deals were made, and this momentum has continued into this year. In the first 6 months of this year, there were more than 2,500 deals totaling 31 trillion yen, more than 10% of global M&A deals. This strong momentum continues up until now. By the end of September, there were close to 3,700 transactions. 1 out of 7 listed companies participated in 1 or more M&A deals. TOBs, or tender offers, are also increasing. Last year, there were 100 TOBs. This year already, there are 110 TOBs announced. Business reorganization is underway because sellers urgently need to streamline their business portfolio, and buyers are actively looking for growth opportunities. The question now is, what's next? Our role as a market operator is a platform provider. The main actors on the stage are the investors and the companies. So instead of pursuing our own agenda by executing a fixed action plan, we try to understand the current situation and respond to the need. What we can say for certain is that we are committed to continuing the reform. Ultimately, this is not about a disclosure. Therefore, we do not plan to mandate disclosure or any other obligation. We do not think that any set of rules for capital structure would be appropriate. This is particularly true because capital efficiency is not a one-size-fits-all type of concept. It varies from sector to sector and according to the uniqueness of each company. To achieve sustainable growth, constructive engagement with the market is crucial. Companies need to obtain skills and be willing to learn about themselves from the market. They have to maintain transparency and earn the trust of the market. Shareholders and the investors also have responsibility to engage with companies in a constructive manner with appropriate understanding and focus on the mid to long-term growth of companies. This is just the beginning, not the end. As a market operator, we will continue to provide various tools to support companies and investors in this process. Especially so far, the 55 good case studies and 10 bad case studies or misalignments referred to by global investors have been well received. Stock prices of those companies selected as good cases have performed strongly in recent months, indicating positive investors' response. And the bad case studies are even better because they are often used by investors and companies to inform their decisions and in their engagements. We plan to update these case studies in early December with more details around the not-so-good cases turning to good cases and the process of that transformation. Also, investors have been sharing that some companies have found themselves comfortable around ROE 8% or just trading around book value. There's a strong need to incentivize further growth, so we must share these visions with the companies. There are also other important initiatives at JPX. I would like to share just a few. One is the startups or derivatives market and use of AI. First, supporting the growth of startups companies and listing of foreign startups. Startups are very important as they lead the growth of Japanese economy with innovation and technology. Historically, IPO has been an important means of fundraising for startups in Japan since there were few institutional investors in the private market. However, many startups fail to achieve the high growth potential after listing. And because their market capital or size stays relatively small, those startups remain uninvestable by institutional investors, which becomes a negative spiral of lacking long-term investor support. Based on feedback from more than 100 investors and startups and reviewing the current issues, TSE plans to revise the listing rules after 2030. Current listing rule requires companies to have at least 4 billion yen market cap within 10 years of listing. But in 2030, the criteria will be higher to 100 billion yen within 5 years. Also, to utilize our market as an incubator for Asian startups, TSE has set up TSE Asia Startup Hub. This is an ecosystem of 56 partners from banks, brokers, VCs, audit firms, and law firms that support 20 Asian startups from 7 different areas: Singapore, Taiwan, Vietnam, Malaysia, Philippines, Korea, and Indonesia. The outlook for Japan is not too bleak around the interest rate market as well. As the BOJ makes monetary policy changes, the normalization process gives many new opportunities and trading venue. The interest rate-related market is getting more traction. The main benchmark used in Japan for the interest rate market has been the 10-year JGB futures listed on OSE. Trading volumes are up 50% in 2 years. Even for the longer-term interest rate markets, such as 20-year or longer, Because the interest rate was too low, 10-year JGB futures market was used to provide good enough risk management tool. However, as the interest rate is rising, the longer-term interest rate market is becoming more active, such as our 20-year JGB futures recently reaching their highest open interest since 2014. On the other hand, the short-term interest rate futures, toner futures, are now trading at average nearly 9,000 contracts per day, 10 times of last year's level. In the US, CME's Treasuries futures market is liquid and sizable. Compared to CME, the size of Japanese market is quite small, but like CME, with various products at each yield curve point, from short-term, long-term to a super long-term, the variety of Japanese interest rate market is increasing as well. JPX handles not only the listed products, but also JSCC, which is our clearing house, provides clearing of over-the-counter interest rate-related products, such as Japanese yen interest rate swaps and the JGB cash bond trading. Both clearing volumes are reaching record high. For Japanese yen interest rate swap, average daily clearing amount has increased by 7 times from 2021 to 2025. Now it's growing to 111 trillion yen in 2025 July. Share of foreign customers doubled to 15% from 7% in 2021. Globally, 60% of the dealer trade and more than 30% of customer trades are cleared at JSCC on a notional amount basis. In September, CFTC, the American regulatory body, granted exemption of U.S. customer clearing. Once onboarding process is completed, U.S. customers will start clearing at JSCC. Clearing volume for OTC cash Japanese government bond is also on the rise. Since the clearing service launched in 2005, daily average clearing amount has significantly increased from 24 trillion Japanese yen in 2005 to around 250 trillion yen in 2025, with the highest record 314 trillion yen on August 2nd, 2024. JSCC is the only clearing house for JGB with a market share of 80%, mainly JGB repo. Even without mandatory clearing regulation, brokers are voluntarily using JSCC. As the OTC JGB trading market becomes more active, we expect clearing to increase and market to grow. Lastly, the power market is undergoing reform right now. As power market in Japan becomes more open, new risk management tool is needed. Japan, the world's 5th largest electricity consumer, now has a rapidly expanding power futures market. After one of the largest banks in Japan, Mitsubishi UFJ Bank, joined as a clearing member in October 2024, open interest has increased 8 times. I believe that we will see an increasing amount of foreign and domestic players enter our market and expansion of the market. Looking ahead, currency futures will be listed next year, and we are ready for digital asset derivatives once regulation allows. With the new AI and the data-related services being developed rapidly, Japan will receive benefit strongly. One report suggests that Japan ranks high in AI preparedness, such as the users and the infrastructure. AI technology will be especially beneficial for Japan because the population is highly educated and will facilitate the adoption of this technology. Use of AI will increase productivity rather than be seen as a threat of taking away jobs. JPX provides AI-related services such as Japanese company Quick Research Engine using generative AI. We did not have time to cover, but there are other initiatives such as our ETF market, which is growing rapidly with more than 370 ETF listed. Its outstanding market cap has doubled over the past 5 years to more than 110 trillion yen. Japan is at a pivotal point in its history. The changes are visible and steadily continuing. We are not satisfied with the current result. We are committed to keep going with the reform. I am confident that the global investors will continue to see the positive changes and the Japanese companies will move forward strongly toward further growth. Thank you very much for your attention.
Thank you very much, Yamaji-san. You've covered a tremendous amount of ground.
A little bit too long.
Very interesting. But what you've described really is a revolution, both on the corporate governance side and on the investor side. But if I may just ask you one quick question, do you think that this is being sufficiently well explained to the investing public, including all those people that still have money under the bed, under the mattresses, as it were? I mean, is the investment manager community conveying all that's going on and the opportunities that are arising for investors, do you think?
Yeah, I think when I became a president or group CEO of JPX, which was back in 2023 April, and before that I was CEO of a Tokyo Stock Exchange, and my basic policy was that I would like to properly inform what's going on in Japan to all the investors, all the global investors, including Japanese investors and foreign investors. So I made the overseas trip, business trip, 7 or 8 times to New York, London, or Singapore, or any other places, and I have been having this kind of conference at each London, New York, or Singapore, many places, and so I think that was to inform properly what is going on in Japan is my basic purpose of my business trips. And nowadays, I believe that the number of at the very beginning, like 3 years ago, investors who knows Japan very well asked me the question that is this time different kind of question 3 years ago. But this year, I've already made 6 trips outside of Japan, include the Middle East, New York, London, Singapore, and Australia. And I will have a Singapore trip again next week. But nobody asks that kind of question.
No.
So I think those global investors notice that this time is different. And however, probably they have the questions: what's next, or how long does it continue? Kind of questions. It's very hard to predict. But we, as I said, that we are committed to promote the corporate governance reform in Japan, and good governance is a foundation of investable and attractive marketplace, and also the good governance is a foundation of investors' confidence. So I think we will continue to push Japanese corporates towards that direction.
Okay, thank you. Questions from the floor? Yes.
My name is Richard Susilo from Tribun News Indonesia, the largest media in Indonesia. You mentioned about the TSA Asia startup. This is very interesting for me because involving also one of the members is Indonesia. So when will begin this TSA Asia startup, and what is the target? For example, Indonesian companies could list it also in Japan inside through this TSA Asia startup, and also all Asian people could participate transaction market share transactions through the spatial system, or what? Could you please elaborate about this system? Thank you very much.
Sure, thank you very much. We started this TSE Asia Startup Hub April 2024, last year. And first we selected 14 companies from countries all over Asia. And also we set up a kind of a group of people, including 56 partners, and from the banks or brokers, and also audit firms or VCs, to help the Asian companies to develop their business in Japan. Or in other words, we selected those 14 companies at the first time that based upon the couple of criteria. One is their willingness to list their shares in Japan. The second is their relationship with Japan. In other words, if they have major vendors or major market, if their products' major market is in Japan, we'd like to help them to expand their business in Japan. So this is not only for promoting listing, the IPO transactions in Japan, but also to develop their business in Japan, using this Japanese economy as their incubator. And so there are a number of companies, including JFSA, the regulatory body, or METI, or any other guys are also the observer as this concept. And also we adopt 6 companies, actually 7 companies this year as well. So now we have 20, 14 plus 7 is 21, but one company from last year dropped. So if they lose their intention to list their shares, then they may get out of the group. So now we have 20 companies in this hub. And we have been helping them to develop their business. And in the future, because IPO process is a little bit a lengthy process, so we don't have particular numerical target. But within a couple of years' time, we may see the first IPO from these 20 companies. And every year we will try to find out good candidates from Asian basin. As I said, Indonesia is, one company is from Indonesia, and we are more than happy to help them to develop their business in Japan. And after they develop the business, they become a big corporate, they may go to a US market. That's fine for us. But then we'd like to make the Japanese market as a venue, not only for the Japanese companies' IPOs, but also Asian companies' IPO. And also, there are a couple of ways to materialize this listing for the Asian companies. One way is JDR, Japan Depository Receipts. If, from time to time, Asian government would like to push their own domicile company not to list their foreign exchange only. If they list their shares on the foreign exchange like a TSE, they would like them to list their shares on their domestic market as well. So in that case, just JDR is using real stock as a DR in Japan, but you can use the same stock in the domestic market. So in this case, we can fulfill the request from the domestic government's request. And there are a number of ways that they can, reorganize the company as a Japanese company, leaving their main factories, main operation outside of Japan, but they become a Japanese company, and then this holding company as the IPO company. That's fine for us as well. But it depends, if the company would like to keep the organizational structure of the company, then they would choose a JDR. And they don't care too much about it, then they can reorganize it as a Japanese company, whichever. We don't care too much.
Okay, thank you. Further questions from the floor? Yes, you have a question? Sorry, I thought you were raising your hand. No. Okay. Well, are you wanting? Yes, but can you come to the microphone and identify yourself, please?
Hello, my name is Tisanka, and I'm a reporter with Cryptopolitan Digital Assets website. I have a question about any kind of plans or preparations about using stablecoins for settlement, or any kind of, any considerations for crypto spot ETFs.
Yeah, thank you very much. We have been watching the developments in markets like U.S. markets, as well as the Singapore or other markets. And at this moment, the ETF, Bitcoin type of ETF in Japan, I mean, we are not allowed to list those kind of products in our exchange. So it's even though, as you may know, that Japan is the one of the most active trading Bitcoins in the world. At this moment, it's not the kind of the Bitcoins or cryptocurrencies are not kind of the product we can handle. And now JFSA, which is Japan Financial Services Agency, which is the regulatory body, has the committee on to discuss the cryptocurrencies position, whether they define the cryptocurrency as in Financial Products and Exchange Act, which is the which governs all the securities market. And so they are discussing it. They have not reached a conclusion yet, or at least have not announced any conclusion yet. So if the regulation allows us to do those kind of products, we are more than happy to do it. And the stable currency, I think in Japan we have a JPYC, Japanese yen stable coin. I think they have just started issuing a new stable coin in Japan. And also there are another idea among mega banks, all those 3 mega banks as a member to issue the common stable coins. Those 3 mega banks, those are the fierce competitors among themselves. But as far as the stable coin is concerned, they got together to issue the common stable coin. They have not issued any stable coin yet, but I think that's a good idea to promote the stable coins in Japan.
Interesting. Okay. Yes.
Hi, Zuhair Khan with Union Bank Air Privé. I have 2 questions. The first is on the trading volume for the Tokyo Stock Exchange for Japanese equities. It's about 60% foreigners, 20% plus retail, then 10%, I believe, prop trading by brokers. The Japanese institutional investors are remarkably absent in terms of being a significant player in the trading volume. I mean, they're mostly passive. Do you see anything on the horizon where you see more active investment management by Japanese institutions, where they become a part of the price discovery process?
Yeah, I think, first of all, yes, the first question, and you said 2 questions.
Yes.
Okay. My second question is around the corporate governance disclosure. On the corporate governance report, there are a number of sections which tend to have very limited or low levels of compliance in terms of disclosure. One is on advisors, retired representative directors, Komon Sodanyaku. And a lot of companies just leave that section blank and provide no disclosure. Is there any mechanism or plans to try to force them to actually disclose? And the second part is on, similarly, in the same thing, on incentive compensation. A lot of companies provide almost no disclosure, very limited disclosure. Any chance to push more disclosure on that as well?
Challenging questions.
First one, なんだっけ?
Multiple.
Oh yeah, sorry. Okay, back to the question.
Institutional
All right.
investors.
I was thinking about the answers of second question. All right. So yeah, yes. Statistically, you are right that 60% of cash equity trading is done by the foreigners. However, probably half of it, a little bit more than half of it, is done by high-frequency traders. They are making markets. They basically don't take the directional betting, but they make market and bid and offer kind of thing. So, and they are, microsecond kind of, high-frequency traders. So, if you look at the number of transactions or number of trading volume, they become very high in the statistics. And compared with that, we don't have, well, we have a small number of Japanese high-frequency traders. They are calculated, they are regarded as a domestic investor. But I think, mainly those are the passive traders, and there are some active traders, but they don't trade quite, actively, every day, I think. So percentage of trading volume of the Japanese institutional investors tend to be low than it should be, I think. So that's one of the reasons. And you are right. There are now more passive traders passive investors in the marketplace, and we have a similar kind of concern because price discovery function is properly executed through the active traders. Passive traders are just following the market, so they don't have the price discovery function. So, but nowadays, I think, especially after nowadays, I think it's more, I should say, more active traders are emerging. It used to be. Used to be a very big trend for the passive traders, and that trend, continued. But now the trend stops a little bit, I think. So I hope that the more active traders will participate in the price discovery process. That's I hope. But eventually, there's no such kind of proof yet. But I think because NISA expanded Japanese individual investors base quite much. And some of them, at this moment, most popular product is Global Balance, which is, again, kind of index-followed kind of a product. But if once, those individual investors get the experience about the investment, they may have the part of their investment for their active investment as well. So I hope that kind of development would happen in the future. And the second question about the disclosure of a corporate governance code. Yes, you are right. And some of the cases, we believe that better explanation is better than, good explanation is better than superficial compliance. Comply or explain. If you don't comply, it's okay if you give us a good explanation. So we have been telling them that you don't need to comply. This is not mandatory. But if you don't comply, you have to give us a good explanation. And we believe that's good from the viewpoint of the investors as well. That's better for the investors to understand the company or company's policy. And but I know that some of the disclosures are not good enough. And also disclosures of some of the compensation of, I think if you look at the big corporates, I think almost 100% of corporates discloses their compensation. No? Really? Oh. So. I don't know. Okay, so let me let me know which company is it. But I think so again, compensation is a very important policy, and we have been following statistical analysis among, long-term incentive plans like stock-based incentive plans, and I think used to be the fixed pay was 58% of the total remuneration, and 27% was the 28% was the annual bonus, and the 14% was on the stock incentive among Japanese top companies. Now it is 32% fixed pay and 35% annual bonus and 33% equity-related incentive. And I think last year was the first year for those big corporates. The stock incentive is bigger than the fixed pay. So 32% and 33% is stock incentive. So I think, and now we are getting close to the European average. European countries like Germany and France, around 40% stock incentive, and UK is 45%. And the US is too high. US is 75% of the total remuneration is a stock incentive. And the JPX, my remuneration is the 45% of my total remuneration is the stock incentive, which is same as the UK average. So Japanese companies are, gradually shifting from a fixed pay kind of compensation to a more mid to long-term compensation, I think. So that's we know that I don't know which company's disclosure is not good enough. So let me know.
Thank you for your very frank advance answers, especially to question 2. Okay. Yes. Oh, well, okay. Yeah, go ahead.
It's regarding the last answer. I remember that inside the Tokyo Stock Exchange, I think there are several not good companies listing there. And how far is your right, the GPX right, to expel to this to delist the companies into the downgrade to the second market maybe for this kind of companies?
Well, it depends. Like oaths, which is their fake. Their accounting fraud kind of things. They delist it immediately. But in case of like NIDEC, as you know, their annual securities report, they filed annual securities report, but there is no auditor's opinion, and we designated NIDEC as a securities on special alert. And the securities on the special alert is that they have 1 year period to improve their internal management system, and we will check it in the 1 year time. And if and then they have to do 2 things. They have to adequately develop and implement the internal management system. And our JPXR is a JPX regulation, which is a self-regulatory body. They will check the content of the improvement, and they assess whether it is adequate or not. And they will, if the internal management system is not adequately developed, and also there's no chance, they believe that there's no chance that the internal management system will adequately implemented, then they will be delisted as well. So, however, like those big companies like NIDEC, they have so many investors based in Japan, not only in Japan, but also foreign investors. So I think, we, in order to avoid unnecessary chaotic situation, I think we will make it very, very careful steps. We will take the careful steps before we will make them delisted.
Okay. Right. Perhaps I could just ask you one quick question. That is, This come back to this 50% of domestic savings that are still under the bed, as it were. I mean,
But 98% of the savings is in the bank deposit.
in Nigeria, yeah, right. But okay, well, whatever the figure is, there's a lot of money which is not in the stock market, as it were. But a lot of people in Japan, I think, are interested in things like climate change. They're interested in infrastructure. They're interested in health services and so on. But when it comes to investing, it's very hard to find a vehicle which is specifically oriented towards alleviating climate change or to building infrastructure. So do you think there is room for new types of investment vehicles that instead of simply going through equities or bonds, you can identify sectors that you want to invest in?
JPX has developed many different kind of ways to kind of information providing systems. Like we have developed one system which you can get through our homepage. You can get all the ESG related disclosure among the listed companies. We called it ESG link. Sorry, you can access it through our homepage, and you can get all the disclosure documents of the Japanese corporates about the ESG related things. And also ESG-related bond issuance. Also, we have developed a similar kind of system. And I think even though there are kind of the setback, especially in the U.S. about the ESG or kind of things, but our situation in Japan is totally different from U.S. or Europe. And I think we have to promote ESG-related, especially carbon neutral related things in Japan as well. And I think this is a very good time for us to catch up those front runners like EU or US. And also the kind of things like gender diversity in Japan is still, it's a very, very early stage. And we have to promote those kind of things as well. So regardless of what's happening of US or Europe, I think we'd like to promote those kind of things. As one of the corporate governance reform, we'd like to promote those ESG-related things as well.
Okay, thank you. Right, we've got time for just perhaps one very quick question, if not. Okay, a quick question, please, because we're coming up to 1:30.
Alex Seiler from FGS Global. So Japan is a market where we see a lot of so-called activist investors, which shows that there's a lot of untapped potential. And they often use corporate governance at a point of attack. So what are the key areas within the corporate governance where you see the biggest need for enhancement, and what is it? Can you elaborate a little bit on that? That would be great. Thank you.
Right. I think it depends on each company, but I think well, in other words, in order not to become a target of activists, you have achieved the good capital efficiency and also the growth. Unless if you have a good capital efficiency and the growth, I think there's no room for the activists to get in. I think so. Yes, I agree with you. At this moment, there are a number of engagement funds. I call them engagement funds rather than activists, because activists has a very bad, connotation in Japan because of the 20 years ago when the first boom came in Japan. That was a very bad image. So engagement funds, yes, there are a number of engagement funds active in Japan, but at the same time, as a market operator, we don't show any favor to any specific type of investor, but also at the same time, we don't reject any specific type of investors. We are open to everybody. And in order to maintain the very good liquidity of the market, we need every type of the investors. So, we are not welcoming any specific type of investors. But I think, if they provide a good enough, say, argument to the companies, and the companies, have to answer those questions. I think that's good, to have a more active dialogue between the investors and the companies, and good for the other types of investors as well to know what the companies are facing with. And also at this moment, we have about market cap is about 1,100 trillion yen, of which about 1% of the market cap is owned by activists. So about 11 trillion yen, and which is, the UK is more than 2% owned by the activists of the market cap. And the US, I think, including GAFAM, because GAFAM's market cap is huge. It's a 0.8%, but excluding GAFAM, it's about more than 1%, so same as Japan. So we don't think Japan is activists are very, very too active in Japan yet. And also, last year about 300 company, 90 companies received 300 shareholders proposal in June. And this year, 114 companies received 399 shareholder proposals, and of which 137 was from the so-called engagement funds. But only a couple of them got passed at the AGM. So some of the proposals received, say, 30%, 40% kind of voting support. But still, I think their proposal is not good enough to persuade all the other types of the investors as well. So I think, but if they are providing a good argument at the AGM, I think that's not bad.
Thank you. Well, I think we're up against our deadline, unfortunately. Thank you very much.
Thank you very much.
You're very educational and interesting. And as I said earlier, we've covered an awful lot, or you've covered an awful lot of ground. We'd like to present you, as we normally do, with the one-year honorary membership of the
Thank you.
FCCJ, and we hope you'll use it to come and visit us on any social occasion, but also to come and give us more presentations of the kind you've provided us with today. So please join me in thanking our...
Thank you very much. Thank you very much.
Thank you.